Bitcoin had a little spill. The overall market is looking a little bearish. I'll show you the pattern I'm looking at right now. But before we get going, consider subscribing. We're at almost at 9,800 subscribers. I'm really trying to get to 10,000 before the end of the year. And when I get there, I'm going to open up our channel membership, stalagmite level real-time trade posts and members only membership to all paid tiers for a month when that occurs. So check that out as well, especially that stalagmite level. But soon when we get there, I'll have those posts opened up to all paid tiers for a month when we get to 10,000 subscribers. So go ahead, hit that subscribe button, get us to 10,000. It's such a big, monumental number I'm trying to reach right now. Anyways, let's get into this. So today we're looking at very little news in the way of economic news. Today we got auto sales coming in. That'll be kind of interesting. Michelle Bowman is testifying this morning at 10 a.m. So that'll be in about a little over an hour. That could move the market a bit, depending on what is said there. And then ISM services comes in. Not ISM, manufacturing, that came in yesterday. That got worse. ISM manufacturing, so ISM's not looking so good. Tomorrow, let's see, we got PCE on Friday, but the big day is next Wednesday, December 10th, when we get the Fed rate decision, and I'm pretty sure we're going to get that rate cut, and that is probably what the market is waiting for right now, which is why we're seeing things up at resistance or on support, kind of just hanging out in those areas, looking to either to jump or dump based on whatever happens on Wednesday. The other thing to look at right now is name index exposure. We're at 89 for active fund managers. They're 89% exposed. And if we come over here on this chart where it says bearish, it's at neutral. So it's currently at neutral. That's not bad. That's not bad. Notice what we've been doing since May is jumping between like high 70s and 98, 99. And right now we had that pivot point at 86. This could go right back up to 100. So we're kind of just fluctuating. We're chopping. We're in a sideways, choppy kind of market in terms of the involvement of active fund managers. But we are at neutral right now in terms of their bearishness. So that could be something interesting to look forward to towards the back end of December. Usually the first week is pretty rough in December, and then we start to see it come out of that in the second and third week. And I think this year it'll be back end of the second week once we get that rate cut and hear whatever Jay Powell has to say at the press conference. Also, ICI money market funds, this is still growing. It's now at $7.5 trillion. Institutions have been adding to their stockpile of money market funds lately, which isn't necessarily a huge confidence boost. At some point, this is going to start coming back into the market. Not all of it, but even if half a trillion or a trillion of it ends up back in the market, that would be a huge, huge deal for equities. So watching this grow is kind of annoying, but eventually when it does taper down, we'll see a significant increase in equities once this is finally flowing out instead of in on the money market fund. All right, so let's go ahead and take a look at the thing that's bothering me. So one Bitcoin. So I mentioned this 20-day moving average, right? I mentioned it and I said I don't like that, and then it dumped. I got out of the way of Bitcoin now for a while, and some people say, "Ah, what an idiot! You sold. You shouldn't have sold. Look, it stopped at 83.8 and went back up, and it's going to go back up now." And that's very possible. That's very, very possible. But it is an unconfirmed pattern right now. So I'm under the 9, I'm under the 20. That's an area I don't want to be. It's an area where it could easily roll back over. So what am I doing right now? I am currently watching for this, right? I want to see it take out the 20. Let me do that better. I want to take out the 20. Okay, I want to get above it. Maybe do a little flag, maybe just shoot above it, but I want to see price trading above the 20 and preferably above this line right here, if I could draw it straight, above that line right there, which is at about $92,000, about $91.5. I want to see price above $91.5. Why do I want to see price above $91.5 before I'm interested again? Because of a double bottom, all right? Double bottom. We have a bottom here and a bottom there, and the neckline is about 91.5, 92. And when we're above that, then we've got room up to this structure here, which is about 101, 102. If that doesn't stop us, we've got room up to about 109 to 111, and that's an area where I would expect, if this is a false breakout from the lows, that's where I would expect things to roll over. So I'd expect something like this, right? Coming up, maybe test it, push up, struggle, push up, and then here is where we really find out what Bitcoin is made of. This is where we find out if Bitcoin is going to go back and make a new all-time high, or if the cycle is well and truly over and it's going to just crater. That's when we'll know. Either that, or we take out this 80,000. We take out that 80,000. We're going to hit the electrical cost of 71,000 real quick if we lose 80,000. So we're going to watch for that. Those are my two base cases. Either above 92,000, we're going to 102, potentially 110, 111, where we find out if Bitcoin cycle is truly over, or if we're really going to make a new high, or we never break the 20 and we go under 80 and we hit the electrical cost of 71, maybe wick beneath it to 67, 68, 66, somewhere in there, and then take off from there from the bottoms. That is really the only two scenarios I'm seeing right now. I mean, unless we do some choppy, like if we chop, that could happen, and that would piss everyone off. So maybe that's what it wants to do, because Bitcoin is really like pissing everyone off right now. But yeah, that's really what I'm waiting. If it's it needs to be above 92 or below 80 for me to actually know where it's going to go. And calling it any earlier than that is that's just me being offside. That's me being too early. That's me speculating instead of reading the chart, basically. So I got in a little early here, and I got that nice little pump, and then it immediately failed once I hit the 20. So that's why I had to step aside and wait for Bitcoin to be over 92,000. That means I also got out of the way of Mara, because now, again, same sort of scenario. Mara gets above 12, I'm looking for a move to 1324, potentially a move up to 1550. If it cannot, well, then I'm watching 975 for it to potentially go even lower, maybe even $4 or $5. Who knows where it could fall? All right, Clean Spark, I'm watching that one too. Clean Spark did a little bit of a better move, but we hit the 50. I want to see it maybe come to the 20 and hold, or break the 50. It breaks the 50, it's moving up to $19, $20. It comes down to the 20 and bounces. Again, it's going to come back to the 50. So I'm watching that one too as well pretty closely. And then Iron's been chopping. It's been just chopping. It's been just chopping sideways. So I'm not really interested in Iron. It's just showing, it's kind of similar to what Core Z was doing back here. Kind of similar to what it was doing back here when we were waiting for like the deal to either go through or not on Core Z with Core Weave. So we'd be waiting for it to break the highs and go higher, or break the lows and go lower. And that's what we're waiting for on Iron right now. It's just sideways. Soluna is another one I'm very interested in, but it is also just kind of going sideways. It's kind of just going sideways. Now, this might be a nice accumulation area, potentially. Let me see how's this volume. Not a ton of volume down here. There's good buys about 150, so it looks like it doesn't really want to go below 130. I do like this sideways action, but I would be waiting for it to break the 20 or come back down to the 200 and hold for Soluna before I'd be interested in buying that again. Now let's go look at SPY. This is what I'm looking at SPY. This is what's got me a little bit concerned about SPY. So look what happened here. All right, we're going to zoom in real hard on these three candles. These three candles, I hate them. Now, we are getting a pre-market move that's looking pretty good, but these look like an abandoned baby. Those look like an abandoned baby. And what happens with an abandoned baby is if this move right here, this pre-market move up here doesn't hold, well, then it falls down to the 50 or lower, which in this case would be about 670, which is where the put wall is currently for the day. So we got 670 put wall, and honestly, the 50 sitting right there, and we're showing an abandoned baby. So I'm a little bit concerned about SPY right now today. So we'll see. We'll see what happens. Very similar to what we had back here. Very, very similar to what we had back here. These three candles right there. That was also an area where I would have said, oh, that looks like an abandoned baby. Same right here too, where we got that move up, that gap up, weakening momentum, and then it came right back down to the lows. So I'm a little bit, I don't love that candle formation that we got right here the last 3 days on SPY, but the pre-market's looking good. So if I go to like a 4 hour, not a 6 hour, but a 4 hour, if I go to like a 4 hour, you can see it's getting a little weaker, but it's trending up, and as long as it holds As long as it holds 67.80, I'm not concerned about it. If it loses 67.80, yeah, it's going to drop down to 670. That's what's going to happen. And if it goes above 684, well then I'd be looking for it to come back all the way to the highs, potentially at about 689, maybe even into the 690s. So that's what I'm looking at there. Now, one thing I'm very interested in right now is rotation. I'm very interested in rotation, and I'm going to show you something that I don't like really necessarily, but we're going to go to the sector tracker. These are the spider funds from State Street. Now, each has a sector. Now, this is the last 1 month performance. Look at what's at the top of the list. Healthcare, materials, consumer staples. That's all recessionary. Every single one of those is recessionary. Look what at the very bottom. Information tech at the bottom. Consumer discretionary. Those are the bullish ones, right? Those are the ones for healthy bull markets. That is bad that those three are at the very bottom and the most recessionary three are at the very top. That is bad for the market overall. What can you do in response to this? Well, you can look at defensive stocks, right? Like, look at this. I was watching Disney yesterday. I got so angry because I wanted to buy this thing. I was watching Disney yesterday. I was like, oh, it's crossing my line. And then I went to go make a cup of coffee and I came back and it was already all the way up here. And I was like, man, I missed like that whole move. So I'm watching that, right? I'm still watching Disney. Now that is a bit of a discretionary one, but it's one of those ones that's like, it's that legacy brand. It's got a lot of pull to it. But the other one, let's see, Dollar General. Look at this. Look at this. It did this nice little zigzag, right? It came down here, did this nice little zigzag, and now it's breaking out, and it's holding here, and it can, if it holds there, it can move up to 116, maybe higher. That's very exciting for Dollar General. Let's take a look at another one, Walmart. Walmart is actually the biggest one of the consumer staples, right? Is it the biggest holding of consumer staples? Let me see here. Yes, Walmart and Costco and Procter & Gamble are the three largest holders. So is Coca-Cola of the consumer staples. Also Pepsi, and if you're in the stalagmite, you know that I own a decent amount of Pepsi. But Walmart, let's take a look at Walmart. How's Walmart looking? Walmart's looking amazing. It's looking friggin' amazing. Look at this. Walmart, honestly, it might just keep ripping, or I'd look for it to come back down to about 109. Like I'd like to just come back down to this daily because that's insane, down at 106. But let me look at like a 2-hour chart. How far is it off that on the 2-hour chart? Not too far. So it's looking like, okay, Walmart's overheated. I'd like to see Walmart maybe come back down to 109, preferably 107 for Walmart before I'd be interested. Or if it starts to create candles above 111.77, said 77, is that what it said? Yeah, 111.77, then I'd be very, very interested. Let's look at Pepsi. I have Pepsi. I have a decent amount of Pepsi. Pepsi, same sort of scenario. Look at this. So we came in, we're zigzag, 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 zigzag. We need to break out above 150, and then we could start looking at like 170. That's a terrible line. 170. We could be looking at about 170 in that scenario. Now we're near the lower bit of that, and I probably have a little more Pepsi than I should, but as long as it's holding above this 200-day moving average, I'm feeling pretty good about my Pepsi position. Okay. That's the kind of thing I'm looking at. All right, those sorts of things right now. The other one is healthcare. Healthcare is also on there, and healthcare's doing pretty well. And what's the biggest one in healthcare? It is Eli Lilly, and I mean, as you probably know, because I've showed it to you before, I believe. LLY. Look at that thing; it's a rocket ship. Now it's coming down a little bit right now, and it might come back down and hit the 20. That 20-day moving average, I'd probably call that a buy. And if it went any lower than the 20-day moving average, I just cut my trade and say, well, that didn't work out. I missed that run, and maybe I'll wait till it hits the 50. Anyways, and of course, nothing I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. This guy on YouTube, you got to do your own research. You got to come to your own conclusions and be responsible for your own risk, because investing is risky and you can lose it all. So it's so important that you do your own research, come to your own conclusions. All I can do is bring you information, education, entertainment, and maybe give you a few ideas to look up further on your own. Anyways, there's that. Yeah, that's what I'm looking at. I'm looking at a lot of those sorts of things. I'm looking at dividend stocks. Like if you just want to shut off your brain and look at a dividend stock, SCHD. SCHD. It's one of the best in the game. And you can see lately we came up off the lows. Like we had these significant lows down here in April, down at like $23, $24. And now we came up, and now we're doing a zigzag, 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 zigzag. And at some point, we're going to break out above this and move back up to the highs, which are in the 30s, right? We're going to move back up to the highs in the 30s, and that is going to be pretty exciting there, right? 29.30. It might even make a brand new all-time high. This is looking also like an inverted head and shoulders. So when we break that trend line, again, back to the high, maybe even higher. That's what we're looking at for SCHD, and SCHD is actually pretty great. I used to own this one, a lot of this one. It pays a 3.76% dividend. That's not bad. Not bad at all. Better than most bonds. So yeah, looking at that. Plus, you own some of the biggest and best dividend stocks in the United States at the same time. And since we're in this range, so in this scenario, I'm either waiting for price to break out above, let's say like 27.80 per maybe 28, or I'm waiting for price to come back down to the 200 at 27, or if I really want to be patient and really think that things might get worse before they get better, I'll wait for 26.33 down here at the very bottom of the range, and then start buying there. But I don't know if it's going to get there, because look at this thing. We got a nice inverted head and shoulders that we actually confirmed. So we came down, shoulder, head, another shoulder, boom, this thing, neckline right there. We're above that neckline, and that could push us up to 28 to the highs. So I'm looking at that as well. SCHD, very big on my list right now. I like it a lot. So that is that. Now, some other things are getting kind of interesting right now. Like even some of these riskier plays are getting a little bit interesting right now. I do like BBAI because it keeps hitting the 200-day and holding. If it breaks the 200-day, yeah, it's going to come down to 382, but I can always cut if it breaks the 200-day moving average. APLD came down, hit the 20-week, and is bouncing up. It gets above the 50, it can move all the way up to 37 or higher. Okay? Quantum is starting to come back. ARQQ, look at this. So now, one thing I don't like, one thing I would definitely wait for is for it to get back above the 200-day moving average. Okay, it needs to get above that, because right now we're in this range, right, between that low there of like $20 and 26, and it can sit here and do this indefinitely until it makes a decision to go further down because it's very speculative, or if it gets good news, come out, break, boom, pop up, and go significantly higher really fast. But right now, this is looking like accumulation. This is looking like an accumulation area, especially since we're what, like 60-70% off the highs. This is looking like a crypto crash. But currently it's 56 off the highs. It went as low as 65 off the highs. This is looking like accumulation down here. I like that. QUBT, this one burned me earlier in the year, also looks a bit like accumulation. We're significantly off the highs, right? We're significantly off the highs. About, it came down 63%, currently sitting at about 57% off the highs, and it is accumulating in here, doing this little sideways pattern. Once it breaks above the 200-day, I'd expect it to hit the 50, come back to the 200, and then boom, along on our way we go. That's kind of what's happening there right now, and that could be a longer term play. That could take a while. So something to pay attention to. Some stocks that I would have that I just got away from a while are starting to accumulate again. Same with RCAT. RCAT significantly off the highs. It is accumulating down here. I like that. DPRO, same with DPRO, same with Archer. They're accumulating down here. DPRO is accumulating at the 20-week moving average. If it breaks that, we're going to the 200 down to 466. But if it can hold, it can move. It's going to accumulate between currently it's near the lows, right? It's near the lows, and the highs are going to be about 870, so it can accumulate between there. And if it breaks 870, yeah, we're going probably back to the highs. Same with UMAC, right? We came off the highs. We're accumulating underneath the 200-day moving average. Once it breaks the 200-day moving average, I'd be looking for a move up to about 12, 13 bucks. So that's interesting. Let's see another one. Some others. Silver. Silver has been on a tear. Silver's been on an absolute tear. Look, it's about $52 now at SLV. Now, if we go to the 1 month, it's been green many months in a row. Was it 8? 1, 2, 3, 4, 5, 6, 7, 8, 8 months in a row, basically, if this month closes green. That it's never done. It's only done that one other time before, and afterwards it ended quite badly. So we would be looking for maybe a mean reversion back to like 41, 42 in worst case scenario. Maybe best case scenario, we get a little reversion down to the 9 month, about 46, 47 bucks, and then we carry on our way. So I wouldn't. I like silver long term. I don't necessarily like silver at its current elevated price after all of that action that has been seen. I'd be looking maybe at platinum, PPLT, which hasn't made a new all-time high yet, but is sitting nicely above a lot of the moving averages, and it's kind of just hanging out. And it is down 2%, so I might be interested in some PPLT there, or SBSW, which I have. And it does many different metals, including gold and platinum and palladium and a few others. And when the one bounces off the 9 again, I'll probably add it and take it higher. Another one to pay attention to. Let's see here. Is there anything else? Not really. So that, also do your ratios. So like basically come in here and do these sector funds divided like in / SPY. to get a ratio. So the one I'm watching closely is semiconductors. Semiconductors versus SPY. It looks like they're trying to come back. So that makes me look at things like INTC, like Intel, which is doing really well. It makes me look like things like ARM, which isn't doing so hot right now, but I do expect once it gets back above the 200-day moving average, it's going to do exceptionally well. Looking at things like AMD, right? Because that is also semiconductor space, all that stuff, and of course the big boy NVIDIA. So I'm looking at that. MU, Marvel, MRVL, but I didn't buy it because they had earnings, I think today. Yeah, I think they have earnings today, or is it tomorrow? It's tomorrow. Earnings is tomorrow. No, it's today. Earnings is today. And it looks like, yeah, it's up 2% again in the pre-market, which I really wish I'd bought this thing when it hit the 200-day moving average, but what can you do? Also, this is looking ominous right here, shoulder, head, shoulder. If it comes back down to the 200-day moving average and loses it, it's going to go back to 62 bucks. So I'm a little bit nervous about that. Currently, I should have bought it at the 200-day moving average. Didn't. Hindsight's 2020. What can you do? Anyways, that's all I've got for you today. Go ahead and smash that like button if you got any good information out of this. Leave a comment down below. What are you buying right now? What is your time horizon? Do you think we're going to get a recession next year? I'm leaning towards maybe, pretty hard maybe, which is why I'm mostly cash right now. Is the Bitcoin cycle done? Let us know in the comments what you think about that. And we'll come back. We'll talk about that some more later in the week and going into the end of the year. Go ahead and subscribe. Get us up to 10,000 subscribers. We're so very close. It'll help us cross that finish line. Check out the channel memberships, especially that stalagmite level where you get the real-time trade posts and members only videos. Also, when we hit the 10,000 subscribers, I'm going to open up stalagmite posts to all paid tiers for a month so you can all get a taste of that and see if it brings value to you. I believe it does. And have a profitable day.